Let me touch on Apple real quick because I think it's kind of disingenuous if I don't talk Apple, considering it's the biggest stock in the stock market and they just reported earnings an hour ago. Apple, it's bad. iPhone's down 2% on a year-over-year basis. Service is really the only, bright spot for this company right now. It's really saving the whole stock and saving the whole story around Apple. That was up 8%. Mac's down 7%. Other products was up 2%. And iPad was down 20%. A huge move down for iPad there for the company overall. Stock not moving down big. And I think, I've seen it down 1 to 3% after hours. The reason being is just a lot of people look at this stock very differently now than they did in the past. And nowadays they treat this stock in a whole different category. Stock trades rich, right? It's about a 30 forward P or so, right? That's a rich valuation for companies that's revenues are going down, right? It's certainly not cheap. But the way people look at this is they look at it very similar to this stock I'm about to show you. Its name's Costco. They look at it very similar to in Costco, where, people just say, hey, somebody's iPhone's going to break, they're going to go buy another iPhone, right? People are just going to keep spending money on services and for the cloud and for apps and all these different things on their device, right? And if their MacBook breaks, they're going to go buy another MacBook. So it's just seen as like a consistent business. It's not the Johnny Ive, Steve Jobs, Apple nowadays, right? It's just seen as like, it's just consistent, right? It's Costco. Costco, people are going to go, Costco's not going to report the most insane revenue growth, certainly, right? But they're a company that, is going to put up their numbers, and you go there on a Saturday, Sunday, well, just about any day, and the place is going to be packed, right? And you're going to have all these people getting gas. And so people put a stock like Apple in the same category that they put a stock like Costco, and Costco trades rich, right? Costco trades at like a 35 times next year's earnings. That's extremely rich in the market, right? But people say this is just stability. You're paying to park your money in a stable stock that hopefully can grow EPS each year for many years to go in the future, right? Corsair Gaming. Net revenues definitely headed in the right direction. That's great to see, certainly, right? Did I get taller, or is my camera like off a little bit? Because I'm like, what in the world's going on here? Maybe I grew? Maybe that's why I got sick. I was growing. Oh my gosh. Who would have thought it? So Corsair revenues obviously up substantially on a year-over-year basis, 283. They did the same quarter last year. They did 325. That's good to see. Gross profit is exploding higher. That's definitely great to see, from 36 million the same quarter last year to 82. Next few quarters should be very fun in regards to gross profit. Company still has an operating loss. Obviously, they made tremendous progress from almost a $55 million operating loss last year in the same quarter, now $2.7 million. So they've almost flipped that. That's good. Net loss, they were losing almost about $52 million in the same quarter last year. Now they're losing about $4 million. So great progress in regards to Corsair, but this is a company that should be profitable pretty much quarter in and quarter out. That's what I need to see from a Corsair Gaming. So in my opinion, they still got, room to fix the business and get in a better place, in my personal opinion. In regards to Corsair Gaming stock, it's pretty much just a hold for me right now. I'm expecting this company to really be profitable quarter in and quarter out. I don't like to see, you can make an argument maybe the quarter after Christmas, maybe that could be a weaker quarter, but I mean, this is a business that should just be putting up great numbers, in my opinion, quarter after quarter. I'm not just talking about revenue, I'm talking about profitability-wise. So for me, I'm just holding the stock now. I need one of two things to either happen. I need the stock price to go down substantially for me to start buying more, or I need a situation with Corsair where I just start seeing them execute even on a higher level, right? This is great progress. I don't want to diminish that progress. It's just like, it could be a lot better. It could be a lot better, right? Revolve. So, next one up here. Number 3 of these 5 stocks that just reported earnings, Revolve. Oh man, okay. So right now I'm up about 41% on my shares in the public account for Revolve. I'm going to call it what it is, okay? The quarter was a dumpster fire. As much of a dumpster fire as AMD's earnings were, no, not that much of a dumpster fire, but then again, AMD's earnings were so much of a dumpster fire. I don't know if we've seen that big of a dumpster fire of a quarter, okay? Revolve numbers were pretty dumpster fiery, though. Let's call it that. Stock's down 8% after hours. I think it deserves to be down 8% after hours, okay? The numbers were not impressive at all, right? Net sales were down about, we could call it about $16 million roughly on a year-over-year basis. Operating expenses, ultimately went down less than revenue went down, which is not something we really want to see. Net income dropped substantially. EPS dropped substantially. We're talking over a 50% drop in profitability for the company overall. Not good. Not good earnings. But we've been in a goods recession. I do believe things are going to get better for Revolve in the back half of this year and as we go into next year. So that's the good news. But the bottom line is these numbers they just put up for this past quarter are pretty dumpster fiery, okay? Now, the company just announced a $100 million share buyback. They have cash loads to the sky right now. Revolve, as of the end of this quarter, had $269 million in cash and cash equivalents and no debt. So, do I approve of this as a shareholder of this stock? 100%. This is the best decision the company can make right now, okay? At the end of the day, they can't control if you're in a goods recession or not. Their business is likely, in my opinion, going to improve in the back half of this year in terms of that top line, which will, in my opinion, help the bottom line, and especially as we go into 2024. So they can't control the ups and downs of business, but they got all this cash sitting around. They got no debt on this company. Their share price is super cheap right now, which I do not believe is going to stay super cheap forever. I believe they probably got 3 to 6 months of buying these shares under $20, and that'll be about it. That'll be about it, in my opinion, in regards to that. And so this company needs to not just buy these shares back, but they need to do it aggressively. They need to buy back shares aggressively this next 3 to 6 months, in my personal opinion, if they want to get as many shares as possible under $20 a share. They need to try, obviously, not to spike the stock price, which is hard because Revolve's a smaller market cap company. But this is, there's certain time periods when a company announces a share buyback, and I don't agree with it. I'm like, I think we could use that money here or there, doing this or doing that. I 100% back this overall. Now, in terms of next quarter, gross margin, they're expecting on a little bit of the lower side compared to previous guidance. Fulfillment expenses also slightly worse. Selling and distribution expenses slightly worse. General and administrative expenses a little on the higher end, okay? So not a disaster in terms of that, just slightly worse than kind of expected. Now, when it comes to Revolve, the great news is this company's trading at about a 23 forward P for a company that I believe, next year is going to be able to accelerate EPS in a substantial way in revenue. Here's the deal with Revolve, okay? This company, in my personal opinion, is going to have extremely easy comps next year, right? Because they're going to be comping against all these goods recession type quarters. And I think ultimately at the end of the day, that's going to be a huge tailwind for the business, for Revolve. And I think it's going to put them in a really, really good position. Remember, they're going to likely take a lot of shares off the market as well, which could definitely help out their earnings per share because there's going to be less shares counted against their net income. So I think you're going to have an interesting dynamic where they're going to decrease how many shares are outstanding in a substantial way over this next, let's call it 12 months. But meanwhile, over this next 12 months, their net income is going to increase quite substantially. And so we're going to end up in a very nice dynamic when it comes to earnings per share. So overall, I think their earnings per share growth could be pretty darn phenomenal for the next probably 12 to 24 months, regardless of the economic climate. And so I'm really, really excited about Revolve's long term. It's just they had a dumpster fire of the quarter in a short term, okay?